Hello everyone, and welcome to this in-depth exploration of Bitcoin scaling in layers. Bitcoin isn't just digital gold, it behaves like a living, evolving organism, a network designed to scale securely and sustainably. The secret lies in its layered architecture, which keeps the base layer rock solid, decentralized and secure, while higher layers handle speed and scale. In this video, we'll break down the four-layer model. Layer 1 as the core Timechain, Layer 2 with non-custodial scaling solutions like Lightning and Liquid, Layer 3 for convenient custodial services, and Layer 4 for indirect Bitcoin exposure through equities and corporate treasuries. We'll cover how each layer works, real-world stats as of February 2026, adoption trends, trade-offs, and why this modular approach is key to Bitcoin's long-term success. Let's dive in, starting from the foundation. Layer 1 is the Bitcoin blockchain, often called the Timechain to emphasize its role as an immutable, chronological ledger. This is where true sovereignty lives, decentralized, permissionless, and secured by the hardest proof of work in the world. Miners compete to solve cryptographic challenges, adding blocks roughly every 10 minutes, validating transactions, preventing double spending, and enforcing the 21 million BTC supply cap forever. Every block links to the previous one via its hash, creating a tamper-proof chain of history. Fast forward to February 2026. We're well past the 2024 halving, with block rewards now at 3.125 BTC per block. The circulating supply sits at nearly 20 million BTC. Daily transactions hover around 494,000. The hash rate has climbed to over 1,054 exahash per second for incredible security, and the full blockchain weighs in at about 722 GB, growing steadily at roughly 12.8% year over year. Bitcoin's fiat price is currently around $67,000, down about 50% year to date in a broader market correction that's wiped $2 trillion off the global crypto cap since late 2025. Yet the network shows no signs of weakness, no prolonged outages, resilient miner participation, and strong fundamentals. Adoption here is deeply mature. Bitcoin dominates with a market cap over $1.3 trillion, serving as a store of value, remittance tool, and increasingly a corporate treasury asset. Active addresses peak around 865,000 during rallies. About half the supply remains in profit even in this dip, and sentiment indicators like the Fear and Greed Index sit at extreme fear levels around 9. This layer trades high throughput for unmatched security and decentralization. It's not built for coffee purchases, but for final settlement of massive value. That's exactly why we build layers on top. Now, Layer 2. Non-custodial scaling solutions that extend Bitcoin's capabilities without compromising self-sovereignty. Users retain full control of their private keys, no trusted third parties holding funds. The star here is the Lightning Network, an off-chain payment protocol. You open a bidirectional channel by locking BTC on-chain, then conduct thousands of instant, near-zero-fee transactions off-chain. Only the opening and closing balances settle back to the blockchain. Advanced features like channel splicing let you adjust liquidity dynamically, and Taproot integration enables multi-asset support. In February 2026, Lightning is highly operational. Public capacity ranges up to 6,500 BTC, with up to 75,000 open channels and around 18,000 nodes. Monthly routed volume exceeds $1 billion. Transaction counts surpass 25 million per month, settlements happen in sub-seconds, and fees stay under a cent. Real-world use includes remittances, Nostr tipping, micropayments, and even AI agent payments. Wallets like Phoenix have made UX seamless, and major exchanges like Binance and OKX support Lightning withdrawals, with projections suggesting it could route 30% of all BTC transfers by year-end. Complementing Lightning is the Liquid Network, a federated sidechain pegged one-to-one to Bitcoin. It offers 1-minute block times, confidential transactions to hide amounts, and native asset issuance for tokenized securities or stablecoins. Total value locked exceeds $3.2 billion, powered by Simplicity smart contracts for verifiable logic. Liquid targets institutional and high-value use cases. Think Bitfinex securities tokenization or Lombard Finance deploying billions in DeFi strategies. Together, these Layer 2 tools address Bitcoin's on-chain limitations, enabling everyday utility while preserving the base layer's integrity. Shifting to Layer 3. Custodial Lightning Services. Here, providers handle keys, channels, and routing, sacrificing some self-custody for maximum convenience. This layer bridges the gap for newcomers who want Bitcoin speed without the technical hassle. Popular examples include Strike, which operates like a global Venmo on Bitcoin, fast payouts, fiat on-ramps, biometric security, and widespread availability for remittances in emerging markets. Wallet of Satoshi offers dead-simple mobile payments in over 170 countries, with email-based recovery and millions of users loving the zero-friction experience. These services process billions in annual volume and drive mainstream adoption. Finally, Layer 4, Bitcoin-linked equities and treasury companies. This is indirect exposure. No keys, no on-chain access, just price correlation through shares or corporate balance sheets. On the ETF side, spot Bitcoin funds exploded after 2024 approvals. iShares Bitcoin Trust, IBIT, leads with over $50 billion in assets under management, AUM. Fidelity's FBTC, Grayscale's GBTC, and others contribute to total spot ETF holdings topping 1.4 million BTC, representing more than 6% of total supply. 2026 has seen outflows amid the correction, but yearly inflows reached $21 billion, showing tactical rather than structural retreat. Corporate treasuries add another dimension. Strategy, MSTR, leads globally with around 717,000 BTC valued at nearly $50 billion. Mining firms like Marathon Digital and Riot Platforms provide operational exposure. Internationally, Japan's Metaplanet holds $35,000 BTC, while public companies collectively control over 1.1 million BTC, more than 5% of total supply, offering leveraged or diversified plays on Bitcoin's fiat price. Bitcoin's layered scaling, from the unassailable Timechain securing trillions through lightning-fast, non-custodial rails, user-friendly custodial gateways, to seamless Wall Street integration, demonstrates incredible adaptability. In February 2026's volatile environment, adoption continues upward, proving Bitcoin isn't just surviving, it's thriving across every layer. These layers show why the network keeps growing stronger and stronger. Isn't it time you learned more about Bitcoin?